Hey everybody, it's Pete. Good morning and welcome to a new episode of Stocks for Breakfast. Today we're going to talk about stock picking. We have some really talented people inside the bootcamp right now who are struggling where their timing is off, where they're claiming that I guess I'm just not a good stock picker, which first of all, it's not that hard to do. What it really comes down to is having structure, understanding which stocks you should be buying first. In other words, in my world, that means we look at order flow, we learn how to read the tape, and learning how to read the tape is really a big part of understanding when to buy a stock. There's a difference between a stock is going up and there's a difference between that stock that's going up, I should buy it right now, because you have to consider risk reward and mostly the risk part, because there's essentially three different situations where you could potentially be looking to buy a stock. So in today's video, we're going to discuss how to break down broad strokes of ideas of when you should be looking to buy a stock, if you should be looking to buy a stock, and then fine tuning your mindset and how you get into those trades based on those conditions that we're about to talk about. So by the way, I just mentioned the boot camp. This market is a little challenging, especially for those of you that are working part-time. If you're looking for swing trading ideas, if you're looking for what I believe is just an amazing community, click down and join the bootcamp. For the tiny investment that is a lot less than just one trade, I would definitely consider getting in there, because we have meetings every single morning. We have coaching calls every single week, and you get the entire community, and you get the course, which is kind of like the big bonus on top of everything, the Order Flow Masterclass. So only you can answer that. If you're struggling right now and you know you have more inside of you, definitely click down and get into boot camp. We'd love to see you on the other side. So we're going to jump over to the charts. We're going to discuss three scenarios. There's really only three that keep things crystal clear for you, because that's a big problem too, is there's so many different ways of doing it. There's, do I use indicators? Do I not use indicators? Which indicators do I use? How do I use them? I don't use any indicators. So I just want to be clear about that. What you see on the charts is what I actually do. So we're going to discuss, there's breakout trades, there's a pause, and there's a pullback. And that's it. Out of everything you could possibly look at, which we've broken down, even candlesticks. I know there's some candlestick books out there, they're like 600 pages. We've broken them down. You only need to know four. And once you really get down to the core of which four you're supposed to look at, then you apply those to entry signals. So I'm going to repeat them so you can write them down so you're crystal clear of when to use them, because having them and knowing when to use it is different. It's like knowing when to step on the gas versus when to step on the brake. They're right there. They seem obvious, but you really need a little bit of experience, a little bit of understanding of when to use them. So again, it's a breakout, which is the most popular one. It's a pullback and a pause. And I will tell you flat out, a pause by a mile is my favorite one, by a mile. And you'll see why in a second. So let's head on over to the charts. We're going to take a look at a couple of different scenarios. And first, we're going to start out with, should you even be considering buying the trade? Should you even consider the stock, and how obvious is the position? So we're actually going to go over to a stock that just reported earnings yesterday, and a stock that's been pretty popular over the last couple of years, as it should. The stock, whether you love the idea of electric cars or not, it really doesn't matter. We're trading the price action, right? So you can see Tesla for the better part of the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks has been what we would call a mess. There's really no other way to put it. There's lack of consistency from one week to the next. It's not following through. It's not remaining well bid. You're seeing buying to selling to opening and closing in the same area. We've had quite a few members of the community during June, July, and August where they made very reliable money in this stock. It was very, very obvious. And then the tape changed, and they were continuing to trade the stock without recognizing that the tape changed, or even more importantly, without acknowledging the tape change. Now, we go very deeply into which stocks are obvious, and we call them the A+ trades. And those are the trades that are all the way up here. And then anything that's not an A+ trade, you have to adjust your trade management. So when you see a stock like this, the first and foremost is not to be involved, because you don't want to be involved in a situation where the odds of follow through are lower, where the odds of continuation, where the odds of your profit target being hit versus your stop loss are low. There's nothing on this chart right now, other than the fact that it reported earnings last night. There's nothing on this chart right now that says, gosh, I really can't wait to be involved in this stock. So we're gonna set that tone first. And I know that sounds crazy about Tesla, but we're talking about reading the tape. We're talking about reading the order flow. We're talking about, should you put your hard-earned money in this stock, buy it on Monday, believing you're going to get out of the trade by Friday and make money on the trade? This is a situation where the answer to that is no. So we're going to hop on over now to a stock that has much different order flow over that same time period, where it's been more consistent, where it's been flowing, where it's been following through. And what I want to talk about specifically is here and here. They are two very distinct trading situations within the context of the stock being strong, going all the way back to March of this year. This situation here is where you have the first two situations where we talked about, where it's trading a breakout or trading a pause within that breakout. So within this 3-week period, we would be drilling down into the daily charts, which is here, and looking for a breakout or a pause, because the higher time frames are following through. The higher time frames, the smart money are pushing higher highs and higher lows and closing on the highs, which, by the way, is another interesting part of that. So you could be looking to buy breakouts, such as here. You could be looking to buy a breakout of a pause here. What wouldn't be working here is waiting for the stock to pull back, because there's no reason to be waiting for it to pull back. That's the key here. You need to recognize the situation, and the situation will dictate the price action and will dictate your entry and exit. And when I say the situation will dictate the price action, that means what price action are you expecting? Now, the problem that a lot of traders get into, and this is really happening in a big way, because some traders are frustrated where they're running scans and they're looking at a stock like this, and it keeps going up and it keeps going up and it keeps going up. And you're like, okay, when? Okay, when? Okay, when? So the situation here is clearly to trade a breakout, clearly to trade a pause in the direction of that breakout. But the problem is you're waiting for too much confirmation. You're waiting and you're waiting and you're waiting. And you're like, okay, now I have to get in, because now it actually is definitely going up. But you're the person buying it here after the fact. You're not waiting for a pause. You're not waiting for a pullback. You're waiting and waiting and waiting, and then you're too late. So you need to be recognizing what is the structure of when you should be getting into a trade, where the weekly chart is showing smart money, the monthly chart is showing smart money, and the daily chart is going up, but you're afraid to get involved too long. So here's the quick and dirty of it, without giving too much away from what we cover in the boot camp. You're looking for a inside day candlestick consolidation, or you are looking for the first time the stock goes what we call well bid, which is here. So we had an inside candlestick here. That would be a pause in the direction of strong buying, or here, which is the first time the stock went well bid, which I talk about here all the time, which is higher highs and higher lows. The first time. If you start buying the second, third, fourth, fifth time that the stock went well bid, the odds are it's going to reduce the risk reward ratio. So if you expect the stock to travel up a certain amount, and the later you buy into what you expect the stock to normally do, you're reducing your reward potential. So if you take the same risk for a reduced reward, the trade doesn't make sense anymore. Now, I'm purposely pulling this stock up because it's one that we've been trading very successfully for the better part of the last 8 weeks. But here's the thing. It's incorrect to optimize a strategy for a stock that goes parabolic and doesn't do what it normally does. The stock was $20 in the beginning of September and went to $88. That's an amazing, amazing move. Congratulations to everybody in the community. And again, if you're not in the boot camp, this one 4 or 5 week period could make you a year. The fact that it kept going up every day, we kept having the same exact conversation around. Right now, it's still a day trade because the upside of a new swing trade is diminishing, despite the fact that it kept going up every day. But it did give us a pause. It paused here. It paused here. So we kind of kept resetting. But here's the point that I want to make. If you keep chasing and you don't pay attention to what the stock normally does, you end up being on the wrong side of this, where the stock was down 21% in one day. So when we mentioned during the day, especially if you watch our best stock picks video, we keep mentioning the stock is a day trade today because it's still long-term bullish, but not a swing trade because the odds of follow through are diminishing as it keeps going higher. So that's what we mean by that. That's a really good visual illustration of that. So again, the first two situations are higher time frames. The smart money is showing clarity. They're showing consistency in their buying. In that situation, you're looking for a pause, or you're looking for well bid and you're looking to buy the first breakout of that well bid. You could be buying a breakout of a weekly chart, but that's a little bit different situation. The second scenario is looking to buy a pullback, looking to buy a decline. So we're actually going to go over to one of my favorite stocks of the year, and we're going to talk about this situation. We're going to talk about this situation where the stock in a longer term window is very strong, but now it's pulled back. So I will tell you flat out, a pause and a pullback are two ways to minimize the move against you, provided that you first find a stock that's very strong. So as you are seeing the stock pull back and close near the lows in the direction of a higher time frame, you are now going into the next day saying, I'm looking for this stock to pause at the previous day's low and find support. Microsoft actually did this yesterday, I believe, where here yesterday, the stock has pulled back and you can see the previous day's low and yesterday's low are the same price. Now, this is not the best illustration of a stock that's longer term strong. I just wanted to point out what I mean by, if I say I'm looking for a stock that pulls back, that holds support, you can see it a little bit more clear here on the 15-minute chart. Here's the previous day's low. Here is yesterday's low. So you get the idea of what I mean by that. So in the morning in the boot camp, I called out Microsoft found perfect support at yesterday's low. So that's another way of reading the tape. So if we're looking at any stock on a higher time frame as it pulls back and closes on the lows, we get questions all the time. What am I supposed to look at? The first scenario is looking at the yesterday's low to be a support level. So I don't want to get into too much detail because I want to reserve that for people who are actually members of the boot camp. But I wanted to give you a structure because I know that I get some feedback. I get some really nice emails. I get some comments here. I get some comments in our new Top Trading Pros community. You have in you the ability to do this if you are coachable and if you could work hard. But, and I want to say this very clearly, but you need to have structure. You need to understand, when should I be waiting for a pause to buy? How do I wait for a pause to buy? When should I be trading a breakout? When am I chasing it too far? And this is not the best moment. Because if you remember, if you think about this is your entry and this is your reward potential, just for argument's sake, right? They'll say this is the ideal one. And let's say now you missed the first entry, you missed the second entry, and now it's the third day. And you're like, gosh, I really got to get into this trade. But now look at how much it closed for what the stock normally does. Because most stocks have normally, I move this much in a bullish move. I move this much in a bullish move. The later you buy after what it normally does, you start to shrink the reward potential for the amount of risk that you have to take. And that's what turns you into a break-even trader. So we need to work together. We need to see different kinds of opportunities. We need to see different questions that you have in different conditions. That's really where your trading education elevates. But I need you to participate. I need you to get in there. I need you to ask questions. The more questions you ask, the easier it's going to be for me to know what you personally need to learn. And I really think that's one of the most exciting parts of being in the boot camp, because we have such a great community where everybody gets out of their comfort zone and is okay with asking questions because we know we're going to help each other. So I hope that structure gives you a little bit of an idea. If you think about it now, it's a breakout, a pause, or a pullback. That's it. That's it. All right. Have a great day, everybody.